Welcome back, everyone, to another episode of Ready, Aim, Retire, the show where we focus on helping people build their legacy, help them through retirement, and all the planning that goes into that. I'm Rob Kirvan here with Tony Shore as usual. Tony, how are we doing today?
We are doing great. I am fantastic. I'm
Okay.
having a great week, Rob.
Oh,
Couldn't be better.
couldn't
Couldn't
be
be
better.
better.
Does that mean like the state fair is around the corner? Is that
The state fair is right around the corner.
okay?
We have the world's second largest state fair in Minnesota. We have the world's second largest Irish fair
Oh,
uh,
no kidding.
in Minnesota. Well, the nation's anyway. I don't know if
Right.
there are Irish fairs
Oh,
other
I'm an Irish
places.
guy. I didn't know
Yeah.
that.
Yeah,
Wow.
I'm 50% Irish. In
Okay.
fact, my mom's maiden name is Whelan. My grandfather was 100% Irish, and my grandmother on that side also almost all Irish, a little bit of English, Scottish, and Welsh mix in there. But
Okay.
yeah, I'm 100%
I love it.
UK over here,
Nice.
and Irish and British. But the Irish fair here in Minnesota is fantastic.
Well,
You
it's
would
gotta
love
be
it.
the
Yeah,
second largest.
it
I
is.
say it every year, but I know a lot of people obviously in Minnesota and that state fair is off the charts. And every year I say, I gotta make it to the state fair. I never do. There's always something, but possibly next year,
Yeah.
now that my daughter will be done, with the school.
Usually about
and all.
200,000 people a day
Yes.
attend the
I don't like
Minnesota
crowds
State
though. So I
Fair.
gotta go on I gotta go on a rainy Tuesday morning. That's what I gotta go. I
You
can't go
do
on a
have to
sunny
go.
Saturday. There's not a chance.
If you go in the AM on a weekday, you'll be fine.
Yeah,
Yeah,
that's where I'd kind of pick it out.
yeah,
But
yeah.
oh,
In the
good stuff.
morning on a weekday, you'll be fine. It's still huge, and there's
Right.
still gonna be people there. But you gotta get there early to get a parking spot. Otherwise, you have to use Park and Ride because it's crazy.
Oh my goodness. Yeah, I
I
don't
mean,
like
can
that
you
part.
imagine 200,000 people
No,
trying to
no, I can't.
congregate at a fair,
No, no.
parking in a city?
I went to a concert down at Soldier Field the other week, and
Oh,
it
cool.
solidified to me why I don't go down to Soldier Field.
Oh, no.
Like it's 2.5 hours in,
Yep.
like in the last 2 miles is about an hour, about a full hour to go to.
Right, the traffic is just
Oh,
getting in there is
it's
tough, isn't it? I mean,
brutal.
I've driven into Chicago for concerts. Yeah,
Yes.
I know that drill, but are you gonna tell us who you saw?
I saw George Strait.
Oh, okay.
An old
Okay.
time country guy with,
Yeah,
so I kind of like all genres of music. So I didn't really
sure.
know like George Strait, he's got like, things on the radio or whatever. I'm like, yeah, that's probably good. I went with my next door neighbors. They're great people. So we went down there and I didn't know, probably what to expect. I didn't know like people just love this guy. And I actually didn't know what he looked like. So
Oh, you
so when
didn't?
when he came out, I'm like, "Oh my, he's a small guy." Right?
Yeah, he
Like,
is.
he's got the big belt buckle on
Yeah,
but
yeah,
I probably knew half of the songs, I wanna say. Like even old ones that you're like, "Oh, I didn't know this was George Strait." So, yeah, he was pretty good. Chris Stapleton he was there too. So, I was
Oh,
pretty yeah, it was a pretty good
I
time.
love Chris Stapleton.
Yeah, he's got that voice that just you just sit there and yeah, he's pretty good. So it was fun. It was fun,
Yeah.
but again, when you're talking state fairs, I get tickets, once in a while to the Bears. Once I'm in, I'm a diehard Bear fan. I'm in, but the process, it just gets me every time. But say la vie, say la vie.
Yeah,
Onward and
yeah.
upward, I'll get
Well, it's
stuck
an
down there again.
experience, though.
Yeah.
Did
Oh,
who'd you go with? Did you go with friends or your
I went
wife
with
or
Natalie
yeah?
and then our next door neighbors,
Oh,
so we hang out with them.
nice.
We scored good ones, so we're always
Oh, yeah, you gotta have good tickets.
oh, yeah, we get good tickets and good neighbors. We got good neighbors, so they're both pretty good. So, yeah, it
Yeah,
was fun.
yeah, that's great.
Yeah.
Well, Rob, what are we talking about today? I'm gonna
Well,
guess, considering the week we've had so far in the
mhm.
stock market, that you're gonna talk about the stock market
We are gonna talk about the stock market, Tony.
and what that all means, how that washes out.
Exactly. So as we sit here, it's, Thursday, August 8th as we're recording. This will come out, tomorrow on podcast, and then the YouTube will be, next Wednesday or something like that. But as we sit here now, I want to reflect back, and kind of look at, what's been going on. So the S&P went down at one point and kind of touched 10 intraday, down 10%. So when you look at corrections first of all, everyone out there listening, you have to understand that's part of it. Rarely is there a year without a correction. And the average correction, you're going to be in that 5 to 10 to 12% range. Like that's kind of like the resetting of the market. Very natural. You need it to happen because if it doesn't happen, you know what happens, Tony? You build a bubble. You build a bubble, and
Yep.
that one is much worse
Yes.
than going down 10% in 3 or 4 weeks.
And we had been building a bit of a bubble. I mean, we've hit record highs in the last 12 months. There haven't been any major corrections in about 12 in the last year.
There has not been. There's not been. And quite frankly, the market's gone, since November of last year when when Jerome Powell from the Federal Reserve came out and he said, he said without saying we're not raising rates again. Since that point until we sit now, the market's basically gone straight up. Not parabolic or anything, but there's been some great months. There's certain companies that have definitely gone parabolic. April was down. July was about even, and now we're into August and it's kind of correcting itself. You have it's currently sitting right down 7. It's been, it's come back a little bit, but I'm here to tell you when markets go down like that, it's not a V-shaped recovery. They don't go down and then shoot right back up. They gotta build a base. It wouldn't surprise me to go back and test those lows that we hit, on Monday, the final time. And again, that's a natural occurrence. That's usually what happens. Usually you get a washout like Monday and Monday was the 5th, the 5th of August, and it flushed out. I think the S&P was down 3.5, 3.6 by the end of the day. But folks, I'll tell you, Sunday night on the futures markets, it was down 10. So 3.5 is not great, but it could have been a heck of a lot worse. You usually see a big washout like that when you're close to the end of a correction. But you also don't see it. We're not going to wake up a week from now, Tony, and everything's been done. It'll take a little while, but it always does. It always passes. And then also you got to look at this with the same stats year on year. The S&P 500 is up 15%. So so it's up 15%. So and it's kind of funny. I don't get a phone call, Tony, or a text or an email or anything when the market's up 10%.
From your clients?
No, never.
From anybody, yeah.
No, never. No one, and no one questions why the market goes up 10%.
Nope.
No, but they certainly question why it goes down 10%.
Sure. And
what's
Monday
going on, and all that kind of stuff, right? And it's always, every time this happens, and I'll tell you, I'm fortunate. I have great clients, but we meet with them frequently enough that I've been talking about, things that, listen, we're going to get a correction. We're going to get one. And I've been saying that for probably 3-4 months to everybody that's come in, knowing that something is going to happen, So let's break down why. So every correction, there's always a reason. It just doesn't all of a sudden everybody wake up and sell stocks. That there's got to be catalysts to kind of get her going, right?
Right. So people panicked Monday morning. Monday, people were panicking. And why were they? That's what you're going to tell us, right?
Yeah, why did the panic really fly? And yes, I'll tell you, it started Friday. So Friday we had a growth scare. So the jobs report came out with 114,000 jobs in July, which was way, way below expectations. Where all of a sudden fear goes into it, thinking, oh, geez, are we going into a recession? And the report also highlighted that the unemployment had increased to 4.3%, which happens to be the highest since October 2021.
Mm-hmm.
So you put those two things together, you're sitting out there on your island by yourself, and you're like, oh my gosh, it's a recession. Things are going to get worse. And the sell-offs really started on Friday. What didn't help, I'll say global influence. So what didn't help was the Bank of Japan raised interest rates on our Sunday, which is their Monday, and they raised it by 15 basis points. And what that did was it dropped their stock market by 13%. So there's your crap, because it's unexpected. It's like, oh my gosh, what, the whole world's cutting rates, and all of a sudden, and they had to because their dollar was just dropping and dropping. They had to stabilize the dollar, but that poured into our market. So that those kinds of fears pours into our market and takes out the Monday. That's what I mean on Sunday when I'm looking at futures. I'm looking at Japan is getting killed today.
Yeah. And then also the Fed, right?
Like
The Fed last week basically indicated that, they didn't raise or they didn't lower interest rates in the US like people expected.
right.
And I think that led to some of the sell-off too, like, oh, the Fed didn't lower interest rates.
Which is, and you're right. That's 100% correct. But isn't that crazy? Because
It's crazy.
if they're not lowering interest rates, you know what that means, Tony? We got a good economy. That things are going good.
Yeah.
There's certain sectors that definitely fall behind when interest rates are higher. That we've talked on the show about housing and things like that. But overall, if they're not the first, the ones to raise rates, and we've seen the Bank of Canada do it, we've seen the EU do it, and we haven't done it yet. So to me, that's a good sign for the economy.
Yeah.
But these outliers come in and kind of scare people. The other thing that was happening at the exact same time, and this has been happening for the last 3 or 4 weeks, is we're seeing a sector rotation. So we're seeing people get out of the big cap technology stocks and move into small cap stocks, value stocks. And the reason behind that is they are anticipating the Fed dropping rates in September. So in anticipation of that, small cap stocks or smaller companies in the US, if they have lower borrowing costs, probably going to do better. So you're rotating out of these, and the big cap tech, let's face it, some of these companies are up, 30, 40% year to date. So that's a good spot to take some profits from. In our portfolios, we've trimmed a few times on some of those big cap tech names that we have, take the profits and redeploy them into other areas that we feel are going to benefit when the interest rates drop. So we kind of had almost the perfect storm of three things. But that's what a correction, that's kind of, if you have one, does the market correct? Probably not. If you have two, there's a good chance, but maybe that's a 3% or a 4%. But when you throw a 3 in there, then you have 3 different areas with fear, uncertainty, and that's what drives markets down, at the end of the day.
Yeah, and Rob, I want to add that I do sympathize, though, with the people that were panicking, and they shouldn't panic, but Monday people panicked. There was a sell-off, and I think the media is largely to blame, because when I got up Monday morning, I made the mistake of opening up the CNBC and the Fox Business News sites, and the headline is, recession fears grow as S&P loses 1,100 points or whatever it was.
Right.
And they just hyped it. And all these are we in, headed to a recession? And so they're just, the sky is falling, because that's how they sell ads and that's how they attract people. And they just hyped the negative. So they didn't help. In fact, a friend of mine was on an airline flight, and this is what you don't want to hear Monday morning when the stock market's falling and these headlines are out there. Let's listen to this clip.
It's interesting to be here. Flying down there's a little scary. They always have a pilot going, hi, this is your pilot. Before we take off, I just want you to know I invested a little money in the stock market. And let's see if those insurance forms pay off.
Yeah, that's not what you want to hear, Rob.
Tony, that's fantastic.
That is not what you want to hear on Monday morning. You don't want to get on a flight and this is your pilot invested in the stock market.
Right.
So that's a little Robin Williams.
Yes,
for you.
I recognize the voice. I didn't recognize the bit, but isn't that true though? It's one day out of 365 days. If you're retired out there, it's one day out of thousands of days. When you really break it down, and the panic that ensues, to me, it's incredible. It happens, like I said, it happens almost every year. There's some sort of pullback, there's some sort of downturn, there's something happening. And then we get years where it just goes. And like I said earlier, no one calls on those years. And when you wake up in the morning, you're not going to see, oh, another great day in the stock market. Life is, because that does not sell ads. That does not drive fear. And people fearful are going to click on things that drive revenue. Like unfortunately, that's the system that we're in, and like I said, the off air is panic isn't an investment strategy. That is not a strategy whatsoever. And I have a couple stats here, Tony, that are very interesting, which kind of shows you, when you're working with somebody like our firm, we're a buffer zone. We take emotion out of it. There is no panic. There's fundamentals, there's technicals, there's things like that where we look at, and we're not looking at one day because we know Mr. and Mrs. Smith are going to be with us for 20 years. So there's no like, oh my gosh, I better get out of the market. But let me give you an interesting stat. Is I was combing, and I've seen a lot of this stuff over the last few days, but investing.com had an article, and they went through what happened on Monday. And while institutional investors were buying on Monday, they were buying the dip, the retail investors sold aggressively, meaning the people trading their accounts on their own. You're in there, you got a 401k, and you walk into work, Tony, and Bob says, "Oh my gosh, it's a recession. This happened. You better go to cash in the 401k." That's literally what was happening. And there was a lot of it. And when you do that, and when you, like I said earlier, when you sit out on an island and you don't have somebody to bounce something off, we get calls like anybody else you would suspect would get a call on Monday. But some of them are, "Hey, I literally got 2 calls. Hey, Rob, are you getting a lot of calls today?" Like, not asking about their account. Like, just like, "Hey, I just want to check in. I thought you might be getting a lot of calls. Just wanted to say, hey, hi, you hope your day gets better." Like, just nice people saying stuff like that, right? So that part was interesting. And they estimated that the retail investor performance declined 10% since the peak due to panic selling. So you're locking in a 10% loss. So let's say I sell all my stuff, and I feel that I read the news and unemployment is up and we're in a recession and things, and these are all valid things taking if you watch them properly, not if you just see a news headline, but if you do the work and see, like, what does this actually mean? So they lose 10% and they lock it in because they put their stuff in cash. When do they get back in again? Like, is today the day? Is tomorrow the day? Or do they wait until the market has a day where it goes up 2.5% or 3% and then go, maybe I should get in now? And like I said, this bottoming that we're in right now, it doesn't happen overnight. So we could see the S&P 500 go up 2.5% one day and go back down 2.5% the next day. And that's where timing in the market doesn't work. It's time in the market that will pay dividends over the long run. And that's what we like to focus on, from a financial planning standpoint. I did a little bit more research and found that, in fact, the behavior of panic and the behavior of, watching these headlines and panicking and selling when you shouldn't and not getting good advice, in terms of the average investor, their returns are 60% less than the S&P 500 over time, just by doing that. You know what I mean? Like, just by you saying, I woke up, I saw the news, I hit the sell button. You didn't, Tony, but somebody hits the sell button and go and does that. With me and with our firm, and I'm talking to Gradient during the day, and they're looking for opportunities. That's what institutions did. Like, they look for opportunities, going, "Oh my gosh, we are seeing this stock draw down for no reason other than the panic, and now we got a really good entry point." And now we're going to actually
corrections are actually good for investors, especially if you're regularly, especially for people who are still working and not yet in retirement. These pullbacks are good because if you have a correction, that's your time to buy. Plus, you're constantly contributing to your 401k or your IRA, or you should be if you're still working. You're still contributing to your retirement accounts or your stock accounts. If you should be still regularly investing, and then you're buying in all the time. So you're buying in when it's low, not just when it's high. Right. And that's the key right there. You welcome hey, if it's down 20%, now's when we buy. You don't sell because you want to. The market has shown, at least over the last 100 years, that after a correction or even a hold down year like 2022, what did we do this year? We hit record highs.
Right. And that's the patient things. But you're right. When you're talking about dollar cost averaging into a 401k, and I would suspect, and I don't know this, but I would suspect that people, the individuals and the retail investors that were selling were either people close to retirement, in their 401ks, people possibly in retirement in, managing their own IRAs and things like that. But people often forget once they become retired, and retirement, like we talked on the show, it's a big step. It's a
It is.
huge step, so I understand all that, and I understand the panic, and I get where that comes from. But what you have to realize, folks, when you're listening out there, your basket, whatever that looks like, you got that by being patient. You got that by not panicking. You grew that by not panicking, by putting money in, and markets were down. If you're listening now, you went through the financial crisis of 2008. You probably went through the tech crash of 2000, and you're still here, and your account is higher because of it. But when you're working and you're putting money in, you're not usually selling. It's usually the people that are kind of close to retirement or in retirement that are selling those, that are selling because they're afraid, like, oh my gosh, this is all I have left. If this crashes, then I'm in big trouble. But you kind of have to, folks, reflect back on how did you get your basket? You got it by patience. You got it just by staying the course, and that's always what prevails. Even in 2008, Tony, if you didn't panic and the bottom hit in March of 2009. And if you were one of the ones that didn't sell off and you just stayed the course, and let's say you're putting money into the 401k, by mid 2010, you had all your money back. I had people coming into my office in 2012. This is 100% factual. That it was 2012. They said, "Oh, you know what? I put it in cash at the bottom of 2008." I'm like, "Okay, that's fine. Yeah, you got scared, you got panicked. When did you put it back in?" "I haven't yet."
Oh,
So
ouch.
you miss this. You miss the upside.
The huge upside,
The
right? I
huge
mean,
upside.
in those 3 years, it gained back plus some, and
Right.
since then it's hit record highs numerous times.
Yeah,
So
and if you went back 10 years and looked at, what it was at and what it's at now, that's what the market does, folks. And the purpose of the show today is to kind of go, listen, don't panic, stay the course. If you're with us, you're definitely staying the course. If you're out there on your own, call us. Let us be the buffer. Like a buffer is a good thing, to have somebody where when we're meeting, we're telegraphing what I feel is going to happen. I'm telegraphing, saying, I've been saying for months that the consumer spending numbers, they're not good. The credit card debt is high. The car loan defaults are creeping to a dangerous level. And these are all things that you have to look at and go, okay, how are we positioning? And we reposition things. We redo things, and we're always active in that. We're not jumping in and out of the market. We're just going to different sectors. And that's kind of what you have to do. And having a plan with a purpose, for an investor, that's how you build wealth. That's how you build a legacy for your families. That's how you have money down the road for long-term care. These are all things that if you panic, you really, really put yourself behind the 8 ball.
you do. Yeah, don't panic. Great advice. Panic isn't an investment plan.
No.
And I think the other key is it's more than don't panic and stay the course, though. Work with a financial professional who is going to look at the big picture, all the aspects of your plan, all the aspects of planning for retirement income and your investments, and help make non-emotional decisions, help you make the better decisions and not end up selling low and buying high, which the majority of people who do it on their own end up doing. That's the fact. Those are the facts. So that is why you work with a financial professional like yourself. So when Monday morning, I didn't worry about it.
Right.
I was like, oh wow, we're headed into a correction, and I kind of chuckle. They always say anytime the market drops like 5%, they're like recession. I mean, it's funny. The headlines, the sky is falling. So, and now, of course, it was actually more of a blip and less of a correction than people thought it was going to be. But you never know. You're right. I mean, the market's due for a bigger correction, probably. So don't panic. But call Rob. That's my advice.
Rob. Yeah,
I happen to know a guy, Rob Kirvan. I'm not going to name names, but Rob, that number that our listeners can call to set up a consultation with you and your team there at Advanced Planning, 630-780-1099. That's 630-780-1099, or go to apadvisorsgroup.com, correct?
That's correct. And go to the website, apadvisorsgroup.com, because we have we have material on there that could help you. Whether you're working with us or not, there's videos on there. There's things that discuss what Tony and I discuss all the time on this show that can kind of help you through and kind of go, okay, you know what? Maybe I'll take a deep breath today and maybe just, stay the course or whatever the blip in the market is. There's many of them, but we're just talking about the current correction. But yeah, I would encourage people to go on there. And if you want to book an appointment, there's a spot on there. You can do it. You can even do a risk tolerance on there, Tony, where you can figure out, hey, is your risk matching where you're investing in? So all sorts of good tools on there for people.
Excellent. Well, Rob, great show today. Listeners and viewers, thanks for tuning in. That does it for today's episode of Ready, Aim, Retire with our host, Rob Kirvan.